What are equity funds? Equity funds are a type of mutual fund that puts money into different kinds of stocks. Investors buy shares in mutual funds with other people. The fund is managed by a professional fund manager and a team of professionals. They have the resources to research companies and track performance to decide which stocks to buy. Fund managers who look after equity funds also determine how much of each stock the fund should hold. Along with a variety of stock, equity funds should have a certain amount of money held back in cash reserves. Prospective investors should take a look at the annual report that is published to find out what companies the fund manager has chosen to invest in and how much of the equity fund's assets are put in each one. You will also want to find out where the companies are located. For example, some equity funds buy stocks from small to medium-sized companies only, while others focus on a particular type of stock. You may want to buy shares in equity funds that only deal with blue-chip companies or focus your attention on a particular industry. Some equity funds deal exclusively in energy or precious metals stocks. Others focus on certain geographic locations and buy stocks in US, Canadian, or foreign companies only. Prospective investors in equity funds need to understand that their investments will rise and fall as the market changes. The investment is not guaranteed. While the fund managers are generally very well educated and experienced, there is no way to predict how the equity markets will behave going forward. Looking at how equity funds have performed in the past is not a very good way to predict how they will perform in the future. Many people look at the numbers from previous years and use them to make decisions about where to put their money. This may not be the best choice, and investing in equity funds exclusively does carry with it a certain amount of risk. The good news for investors who are prepared to invest for the long haul with an experienced mutual fund manager is that over time the stock market has outperformed other types of investment vehicles. If you have the stomach for it and the patience to wait out the inevitable market downturns that will happen, investing your money in quality equity funds can be a wise financial decision.